Hello, Floridians. I am C. Johnson here reporting on a case that's happening tomorrow. The first case the Tampa legal system will be having. It's MiniAgora v. the City of Tampa. City of Tampa v. MiniAgora. So he's being accused of tax evasion, and here are the things that need to go into it. There has to be proof that he maintained a double set of books. Prosecutors are going to introduce any evidence that Agora kept two separate financial registries. One internal set tracked the company's real lucrative municipal revenue, while a second falsified set was prepared explicitly to show local tax inspectors lower figures. This will obviously make sure he keeps money, which is what he wanted and what this case is about. They're going to try and say he intentionally underreported business gross receipts. The city will audit Agora's point of sale systems, bank deposits, client invoices, and they're going to present data showing a stark, consistent gap between the massive revenue that Mini actually brought in and significantly lower numbers he typed onto his official tax returns. They're also going to have to prove that he fabricated local business deductions. To artificially lower his taxable net income, prosecutors will show that Mini created face invoices, ghost employees, or phantom operational expenses. They will prove these deductions never occurred, and in reality were just staged purely to dodge tax liability. He also will, or they'll also say he concealed assets in nominee shell companies. Prosecution will map out an intricate corporate web. They'll present bank records showing he hid taxable revenue by routing funds to bank accounts registered under the names of relatives, shell entities, or trusted associates to obscure his true ownership. Prosecutors are also going to try and prove that he conducted businesses and handled finances explicitly to avoid a paper trail. Going to highlight a pattern of MiniAgora's demanding cash-only transactions, avoiding traditional banks or unusual payment processors. They will argue to the jury that this wasn't standard business protocol, but a calculated strategy to operate off the grid. And he ignored direct warnings and notices from auditors. To lock the willfulness element, the prosecution will introduce certified letters and email threads sent by city tax authorities showing that MiniAgora repeatedly ignored email threads sent by city tax authorities showing that the official compliance reminders proves to the jury that his failure to pay wasn't an honest clerical mistake, but a deliberate violation of a known legal duty. These are all elements that are going to lead to whether or not MiniAgora gets charged with tax evasion. Make sure to tune in tomorrow to see the court case and how it goes. I've been C. Johnson, Florida News. Thank you.